Good morning. Weekly update of the dollar index, gold, Bitcoin, crude oil, coffee, sugar, and much pause for critical point. It is Wednesday, Jan 29, 8:29 a.m. Eastern Time. Okay, at 2 p.m. today, we'll get the Fed Reserve's stance on interest rates. I think most people in the markets believe they will do nothing, and that's our best forecast, my best forecast. Okay, now, later in the week, we will get PCE inflation report, and they will be looking to compare that to the recent CPI inflation report, which they liked. And now we'll just have to see whether they like the next one. And then, of course, February 1st may have to be dealing with the next leg of trade wars here with Canada and Mexico. And so we'll have to see if the markets want to prepare for that or they pay little attention. And then what are they going to do next week? Dollar index, this is the chart, weekly chart of the dollar index with model analysis. This is the first week for a level one bottom. The level one bottom occurs 2 to 3 times per year. It's the most important kind of bottom buy signal, if you will, for intra-year. Also used to time minor, long-term, and even more important, long-term bull-bear markets. Okay, and it can even be the be the high of the year if it's a top, and low of the year for a bottom. So it's an important turning point for us. Okay, all right. Any rate. The market top for level one dropped and may have bottomed already for level one. That's concerning. That what it means is it ought to really move higher into the summer months for the dollar. And I think that's going to be problematic. I think that's going to cause some issues, at least in the financial markets here. Now, inside of that will be a level two fluctuation to back it off at times. So it may be a struggle at times. Okay. And we don't know how strong it will be. I'm just saying, moving forward, I don't want to see the dollar higher. I know some people do. They always like a strong dollar. They think it's a sign of good, strong economy. But I really think when it comes to stock market, when it comes to commodities, this and that, they would actually prefer a lower dollar these days. Okay. All right. So now this is only the first week. This could be what's called a level 3 bottom, which even if it was level 1, there would be level 2 and level 3 bottoms at the same time. It's like faster hands on a clock. Okay. And we use the level 3 to help time level 2 and level 1s. Level 3 is really a monthly buy-sell signal. It's the largest, longest up move, down move, although sometimes they can last just 2 days and then they go the opposite direction for 20 days or whatever. They can get a little extreme and fuzzy, all right? If this is a level 3 bottom only, then the market ought to top for level 3 sometime this week into next, and I'm preferring next, and then set back for the next level 3, and in theory, it would come all the way back to the low of this week or even lower into a level 1 bottom that may not show up until March 3rd, the week of, okay? And so it may actually take 1 or even 2 additional level 3 down moves to actually find that level 1 bottom, all right? So this is the earliest opportunity for level 1 bottom, and because the prior level 2 inside of it took so long, the model is leaning towards this level 1 bottom to occur on the early side, not the late side. So I'm willing to give it a chance, all right? And again, I just don't think if it's rallying into summer, even and the level 2 is rallying into February, March, I just don't think some of these markets are going to like that, all right? And that may be a sign of problems and bad news, not necessarily good news that we have such a strong economy or something. Weekly indicator actually acting bearish still for this. It is warning a little bit. This may not be that level 1 bottom that is just a blip up for level 3 and coming back down. And this blip up may have just something to do with the Federal Reserve right now. Maybe the PCE report at the end of this week. Okay. Jobs report is not due to the end of next week, so that's off the table right now. We're not considering that on this really short-term scenarios, fluctuations. And again, it can also just be speculation this morning as they prepare for the Federal Reserve today, and then they just go back to selling the dollar. I'm a little suspicious we got a bottom. I think we should go for it. And if it trades back to 107 in just the next couple of weeks, we know we didn't get it, that we want to throw another dart, that it won't be a sign of something bearish for a long period of time. We still got to give a chance for the dollar to bottom out and move higher. Longer term, we're in a bull market in the dollar that should be ending now, but I'm suspicious it doesn't have to end to summer, and I'm suspicious we got a higher dollar in the summer and there's going to be problems. Okay. All right, gold can be long-term bullish into summer. Can place a long-term top in next few weeks here, and doesn't have to achieve Wall Street's 3,000 target and my target of mid to upper 2,900s. It can move higher, however, for the next few weeks and top out the week of February 3rd to the week of March 3rd. And the interesting thing is, I see that a lot in commodities and stock market. I don't know what's going on, but it's almost like the whole world is using February as some kind of a measurement, benchmark, turning point across the board. Many markets. They're all on the same page. Something's going to happen there. Okay. At any rate, I will give the gold market a chance to move higher. To this week's weakness, they snapped it up and then put it down. Now they're trying to bring it back up. I think that has something to do with those level 3 intra-month swings. We might have just seen a level 3 bottom, and it's time to put gold higher into next week, and then we'll start looking for the next level 3 setback, but also starting next week, got to start looking for level 2 and level 1 tops, and the earliest for even long-term tops in gold. Again, I'm a little suspicious gold might want to go higher into summer, but we'll see. There is increasing talk. We might have a recession by mid-year to later, and my economic model has been warning. If you look from like 1980 all the way back to 1800s, it was rather common to have a secondary recession mid-decade. It wasn't the more serious primary recession at the end or start of a decade. And I'm thinking we're really, the way things are going, it's like we're bound and determined to live like the 1940s, 1950s, some of the 1800s. So I'm also thinking the Federal Reserve may either create something or gets trapped into something that brings back that secondary recession. It may have something to do with tariffs, may have something to do with Maganomics, okay? Don't know yet. Don't know for sure. That's not our best scenario right now. I don't want to scare people into saying, yeah, it's coming. It doesn't have to. But we're going to look out for warnings here now all the way into around April, May, June, July of things that could go wrong for the remainder part of this year, and not necessarily an ending world scenario, but indeed we might be setting up for something of once a decade type sell signals for some of these markets sooner than we had been anticipating, okay? That things are opening up to do some things we haven't seen except maybe once, say back in George W. Bush term, and other presidents back in the 1800s. At any rate, though, the trend is up for gold, and it looks like the futures just punched to a new high. This chart is of the futures. Trades below the low of this week. That could be a little bit of a problematic, but until it trades back down to about 2,700, I think we got to give it a chance. There's more upside coming, at least the next few weeks, if not for a few months yet, in the gold market. Let's go to the Bitcoin. And of course, Bitcoin's all been excited, crypto excited of Trump making that the reserve currency. And they're trying to work on the regulations now so that they hopefully makes people feel more comfortable with using it, so more people use it and becomes more popular. Looking for a level 3 bottom now this week for Bitcoin, and thinking it will be higher next week. But I wonder how much higher. And it can go higher into the week of February 17th on into the week of March 17th. A little bit different timing, but overlapping with what we're seeing for many markets that if they have been going up can create a top in February. That something can happen. If they've been going down for many months and can go up while other markets go down, then we're also looking for a bottom for those markets. But in general, most of them are looking for some kind of top here. And so something might snap here in February across the board for markets and our economy. At any rate, for the moment, though, it looks like Bitcoin should go higher into February, even if it trades below this week's low. That would make me nervous, and the model might even act as though it's getting nervous if it was a person. But we'd also have to consider it could be just a late level 3 bottom and still snap up sometime next week here. Weekly indicator is actually acting bearish on this one and suggesting chance for lingering near-term upside momentum next 1 to 3 weeks in Bitcoin. And the model's saying, well, yes, that's the forecast. Okay, so we have a technical indicator suggesting this momentum is up. Even though it's down this week, what it's saying is it hasn't done enough damage, that this next level 2 uptrend can be up. Now, this level 2 uptrend has already been to a new record high, higher than a level 1. That triggers a rule violation in the model. That triggers a new rule saying the next level 1 top that can occur in April, May, June, okay, interesting enough, is in line with financial markets, that it could be higher still, that it ought to be higher still than, say, last week's high or whatever this coming level 2 high or top is, okay? So it's actually giving us a forecast already. It ought to be bullish in April, May, June for a more important sell signal. Now, I say it's too late for a long-term top, but there are some people that are actually long-term bearish now that have been bullish for many, many years. But this new record high this year compared to last year is a setup that we really want to be friendly Bitcoin this year. But I think we want to look over our shoulders for things that just might break in the night here, go bump in the night, that lead to something even more disastrous down the road. And again, that's probably Maganomics and tariffs and world stuff. I think trade below 90,000 in Bitcoin, not a good sign. That something is getting at least slippery, fuzzy. Maybe it just needs to stall out long term. And I will say a long-term bottom is due this year. This record high is saying that bottom should not cause much of a decline at all, that the market really wants to go higher into next year. But it's got this long-term bottom, meaning it could be a nasty down move only to see it recover fairly quickly as well. So that could be a bit crazy on us this year here. And I just, I have to be bullish in the next year, but what I'm saying is there's very close second scenario saying, no, something can go wrong. And we just have to stay on top of it. All right, crude oil topped later than what we would normally like for level 1, pulling back in the time frame for level 2 bottom. It probably is going higher later this year to be in line with the seasonal up move for higher gasoline prices in the summer driving season. Do keep in mind crude oil does not have to be bullish as gasoline, does not have to stay up for its seasonal up move as long as gasoline. Nevertheless, and I also think it's limited fundamentally, supply-wise. There's all the oil we need. And even though Trump is trying to open the door, get those that land back that Biden locked up here, and the oil companies would like to get those leases, the truth is they really don't want to drill right now. They'd like those leases for future years to drill. They don't really want to drill now, okay? And even though Trump wants him to drive the oil price down, and he's now talking with Saudi Arabia to get some help, because I think he's already woke up to the fact the oil companies saying we don't really need any lower. We're not causing inflation. We're not hurting the economy. If anything, we want a bigger piece of the economy because it's a strong economy right now. So they're not going to cooperate him the way he would like. So he's already trying to pull something here with Saudi Arabia to pressure it. Well, as you know, my long-term monthly chart shows that in this $65 area, it probably is long-term support, a bit cheap, and I just don't think they're going to allow it to slip below that right now. And if it does, that's probably a sign of bad economy. And I think it will do that towards the end of this decade for recession, but we're now already on watch. Maybe we can get a secondary recession later this year. Next, things can go wrong in the night here. Something can break, right? And yet it shouldn't be an end-of-world scenario by no means. But at any rate, I don't want to see oil below 65. If my model's not negative on the economy, I'm wondering why. I'm going to start digging deeper and wider, okay, find out why. So I think we're near some kind of support, low price. Don't see a lot of downside here, but I think the upside's limited. We have enough supply here. I don't think they're going to try to rock the boat and upset the economy and Trump and others by rocketing this higher, but they sure would like more profits. They always want profits, don't they? All right, they want more than their fair share. All right, now what are we going to look at? Oh, we want to move. That's the wrong chart. What we're going to do is go over here, and we want to move on down to the sugar market. And the sugar market does show signs of a level 1 bottom, and that can be a long-term bottom. So if you want to buy sugar and see if you can make some money later this year, perhaps even into next year, even more money, I think it's a buy here. Problem is, it might still set back over the next few months one last time. Problem is, it doesn't have to go off to the races anytime soon. It's going to have some problems and complications here and some headwinds. But at the moment, yes, we're saying that's a level 1 bottom. It could be off by a week or two, but that's a level 1 bottom. Now, and therefore, another chance for long-term bottom. And it actually fits, I'll show you in a monthly chart, fits what we were looking at last year, making a year ahead forecast. We were assuming it probably would bottom here. Now, the problem with this, however, is it's already due for level 1 top in maybe the next 3 weeks. I don't like that. That sounds like limited action. I wonder if it means the market needs to move sideways for a while. It's bottom, but it's not ready to come. The bull's not ready to break out of the pen, okay, and head racing across the pasture. All right, we need the fundamentals to develop, come in. We're probably finding fundamentals where they're saying, don't want to sell it any cheaper. I don't have to sell it any cheaper. I'll go broke before I sell it any cheaper, okay? That kind of thing. Some kind of floor price when it's probably undervalued, but there's no reason to go running off the races. So we'll see how well they rally this. I'd like to see a sizable up move, pull it back, stall out a little bit, then up. Then I become more confident of that bullish scenario. But I do think for anybody interested in big moves, it's time to shop. And even if you're just an intra-year trader, it's time to shop for sugar. And at least for that level 1 trade, on a very short-term basis, you might make a little money in the next few weeks, playing more of the upside than the downside. All right. Coffee, still looking for a level 1 top. It went to a record high. They got concerned of the Colombia tariffs and messing with that. They were already putting it up ahead of that. I don't know if they were speculating on that and were clever about that. And at first, it didn't look like they were following through, that the Colombia thing wasn't going to be that big a deal. Now, just a couple of days later after that, they've put it even higher. So here's the dilemma. This is too late for a long-term top, even though it's due for a long-term bottom this year. So it can still set back quite a bit, but it's warning later in the year on into next year, coffee can be higher still. And yet I'm not so sure I'm finding all this crop damage around the world making tight enough market to put it higher in the next year. So I don't get this. So for the first time in decades of working with commodities and specifically coffee, I'm nervous I'm not going to be very helpful on picking long-term tops. There may be something weird when it's all over right now and goes down the rest of this year, doesn't even go up next year. On the other hand, it might just go higher in the next year. This is a strange one. And the reason I wanted to keep watching coffee and sugar is because a climate change could do something strange we haven't seen in 150 years of prices. And yes, I have prices all the way back to about 1720, believe it or not. So I know how it behaves. And this is behaving something different. This is the young man's market now, something new, okay? And I just don't know what to make of it because I'm pretty confident it is going to pull back into a long-term bottom this year. But I'm thinking it may not be all that big a pullback, may not last that long. It may be more stalling out for quite a while and thinking it still can be higher by next year when it would normally would say, no way in heck is it going to do that. Has things really changed, or is there more climate issues? Are there more tariff, trade war issues that actually inflate, push coffee higher? Any rate, looking quite bullish, and I fully understand some people might want to be suspicious of my stance of pulling down in long-term bottom. And like I said, I don't think this long-term stuff is going to work out, especially for sell signals as well as it has for decades. Okay. This is going to be a tricky one. Now, for the level 1, however, it can operate normally. And what that means is we want to look for a top this week and the next 1 to 3 weeks for it to top out, pull down into a level 2. And if it does not pull out much and pull down much and then goes higher still, it'll be forecasting to even be bullish into the next level 1 top that may not even show up to May or June. So this market may be on its way higher May, June. It's just it needs to do a little hiccup here in the next few weeks for that level 2 setback. And right at the moment, I don't have an indication it's topping. I think it's probably is going higher in the next a couple of weeks here, and then give us that little pullback, and then we'll reevaluate. Is it going higher later this year? How bullish can this be? And I do know some people who actually live in coffee areas. They've been thinking for a while that we've been working. This thing has been bullish for a very long time, but it's been a slow, gradual bull market. and companies haven't really passed on their costs to us as consumers. They've kind of wrote it out. Recently, they warned they may just start passing on to consumers and the heck with it, and they're not going to eat it. They're not going to swallow it. And some of these people that they are, they trade coffee professionally, they are saying it may take a straight up gigantic up move to burn this out. And we've seen commodities do this where they go up for like a year or two very slowly, and then all of a sudden, bam, it's a rocket ship, but it's also an exhaustion. It's over and done with, okay? We may need that kind of emotion here soon in coffee. All right, if we then go to the long-term charts in sugar, there's that target range set up a year ago. And here it is. The market is still in that target range. Pretty proud of that. I think that's telling us it is low enough price. Something can take sugar higher later this year, maybe even into next year. Timing wise, we're saying we wanted a bottom in September, and it actually bottomed in August. And we said there's something not quite right about it, but we will respect it and say it bottomed. But really, now it's come all the way down and lower still, but now trying to pop up a little bit. This is the better time for a long-term bottom in sugar, and it can go up like this, but I just got to warn you, there's now evidence it might be a real struggle, not a great bull market. But we can also excite investors to get excited that, hey, if coffee's going up, why not sugar? So that would be on the investor side, not necessarily the commercials. Now, this is the coffee monthly chart, and this is the dilemma. It should have put in a once-a-decade sell signal in December, should have put in a twice-a-decade sell signal in December, and it should have put in a 4, 5, or 6 times per decade sell signal. Those are the minor, mid-size, and major long-term tops. And here we are in January, and we got a record high. Or not a record high, but we got a new high for the decade. And that sets up a signal that something's wrong with our long term, and that's what I'm saying. I think I'm going to have, unfortunately, problems I haven't seen working with this for 40 years and studying this all the way back to year 1720 and doing very, very good at it. I think this is going to get sloppy on me. What's going on is, see this line that I'm showing for this year on into the end of this year, actually, it can pull back for at least a minor long-term bear market. But if this is truly the start of a new bear market, a bull market, then what it's going to do is slam dunk and then just higher next year anyways. Maybe that's a sign of additional crop problems coming down the road here. And coffee's a weird one. You can get a crop problem and it really impacts it for maybe 2 years or something like that. We have to watch out for that. At any rate, I'm just warning you, I don't know how well I'm going to do in the long-term stuff. Right at the moment, I'm quite confident it is going to pull back this year for a while, but I just no longer know how much. It should pull back a huge amount. There's just something weird here. It should not have been at a new high this month for this decade. Something's different than what I've seen in probably 100 years of coffee prices. Past results not necessarily indicative of future results. Have a great week. Thank you.